Absolutely. We have Jupiter Lifeline Hospitals, which is the first management on the show today. It witnessed a revenue growth in double digits and margins improved as well. The average revenue per occupied bed came in strong as well this quarter. To discuss this and more, we have Dr. Ankit Thakkar, who's the CEO at Jupiter Lifeline, joining in. Ankit, hi, welcome to the show. Well, if you could just start by giving us a sense in terms of the average revenue per occupied bed, which has improved this quarter by around 10% on a year-on-year basis. What led to that? What was the mix like this time in terms of complex surgeries? And what are you guiding for in terms of growth on the RPOPs as well?
Hi, Ekta. Good morning. Pleasant news today for the country. On the RPOP side, we have, like you said, 10% growth. Our guidance has been similar that, of the three units that we are operating, Thane and Pune, will continue to grow in line with inflation. And Indore should add a little bit above inflation because it is still in the maturing stages. And there is some scope of case mix optimization in order to improve the RPOPs a little bit over and above inflation. So that is what we are seeing this year. I think the similar story should continue for another year or so before Indore also matures and starts plateauing in terms of RPOP growth.
All right. You also have a lot of, beds coming on stream over the next few years. If you could give us a sense, because of the pipeline that we have right now, you have about 1,050, 1,060 beds, and you are likely to double that, or maybe 2.5 times that over the next 3 to 4 years. If you could give us a sense of at what point do these beds come on stream, and at peak, what are your RPOPs likely to be?
Yes, so we have 3 greenfield projects on our hand currently. We have a 500-bed hospital coming up in Dombivli, which should start getting operationalized within a year. We have another 500-bed hospital coming up in Pune, which should go under construction later this year post-monsoon and then take about 2.5 years to go live. And the third hospital, again in MMR, which we are doing, which is in Mira Road, that is a 300-bed hospital that will go under architectural drawing soon. So this is our capacity expansion, which has been planned.
Okay, so you have it coming up in Pune, Dombivli, as well as in Mira Road. Ankit, I just wanted to get a better sense in terms of the margins then, because you've improved to 24% for this quarter, and that's an improvement both Q-on-Q as well as year-on-year. Is this 24% sustainable? What can we expect on a quarterly basis?
Yes, I think for the coming year, we should have a similar kind of margin profiles in the same zip code. Next year onwards, the year after that, once Dombivli comes in, then that will have some dilution effect because it takes about a year or two before the new hospital starts turning positive. So you will start seeing revenue from Dombivli, but you will not see similar contribution in terms of bottom line in the following year. So on a percentage level, you should see some dilution in the next year. But this year, I think we should be in the similar zip code.
Okay, all right, fair enough. In terms of the occupancies, can you give us a sense in terms of what the occupancies were like? You're doing a comfortable over 60% in terms of occupancies, but give us a sense in terms of what it would probably look like, considering that, the OPDs probably get a little more efficient and the length of stay is also probably reducing. So give us a sense in terms of where we expect occupancies to move.
Yes, so on a unit basis, Thane is at a mature occupancy level. It's in the early to mid 70s. So on that front, we should have something similar expected out of Thane. In Pune, we have mid 60% occupancy, which can go up by about 5 or 10%. And Indore is getting matured. We added about 80 beds in this quarter, and we have a blended occupancy of about 50-odd%. This quarter was at an expanded base 45-odd%. So I think significant opportunity in Indore for occupancy growth. Those are the 3 hospitals.
Okay. What about complex surgeries? What is the percentage of, say, complex surgeries that you are garnering within your hospital, say robotics, higher level complex oncology surgeries, transplants, and what would that do in terms of the overall numbers?
Yes, so in terms of offering, all the units offer all these complex surgeries like you enumerated a few, that is cancer, oncology, robotics, robotic knees, robotic urology, gynecology, all of those. Uh, in terms of the numbers, Indore, like I said, has some scope to improve the mix of complex surgeries. That is, the ratio of complex surgeries in Indore is likely to go up over the next year or two from where it is now. And that should definitely contribute towards improved top and bottom lines there.
What about your balance sheet? I mean, for all the expansion that you're doing, would you require to raise some funds? How comfortable are you right now? What's the cash and debt situation?
So we have 600 crores in cash on our books now. We just raised 325 crores out of the 600 is in the form of debt. We have parked this money. The carrying cost of this debt is just about 1% or lesser. The reason of raising this debt and building a cash position is that if we do find a good opportunity to do a seventh hospital also in the Western India region, then we should be able to move in rather quickly. So for this reason, we have taken on some debt in order to fund future growth.
Okay, so what about M&A? Would that be a part of your expansion plans?
Yes, we are open to M&A, but we are not open to mindless M&A. As long as it makes sense in terms of the quality of asset and the value at which it is becoming available, we do keep analyzing M&A opportunities from time to time, and we'll continue doing so.
What would be the size that you'd look at and the location, considering that you do focus on, say, tier 2 markets? So can you give us a sense in terms of what your strategy would be when it comes to M&A, and how much are you looking to shell out?
Yeah, prominent cities in Western India is what we would look at. In terms of size, we like this flagship hub kind of models, not lesser than 300 beds typically. And yeah, if something like that comes up, depending obviously on the size and the quality, there is no finite or a fixed number that we, in terms of budget that we have in mind. But yeah, if it makes sense, we will do it.
All right. Take that point. Thank you so much, Ankit, for joining in. Just finally, before we let you go, if you could give us a sense on how your payer mix is likely to evolve.
Yeah, so we have 55% coming in from the insurance companies. I think that should remain static or slightly increase with more and more insurance penetration across the country. We continue to have very low 1% kind of government revenue, with 45% coming in from self-payers.
All right. Thank you so much for joining in. Wish you good luck for the remainder of this year and the next few years as you embark upon this expansion journey. We will keep speaking through the quarters. Take a short break, come back on the other side. We have another management joining in. Sigal India joins in to discuss the quarter gone by.